And welcome back. Despite a decrease in mortgage rates this November, pending home sales remained at all-time record lows. So in other words, we're not seeing an uptick in home buying demand because rates have been decreasing. So take a look at this. This is according to our good Uncle Fred here, and the source is Freddie Mac. So in November, rates fell from 7.62% to 7.44%. That is the average for each of those months though. Look at the daily rates though, because it kind of tells us a different story here. This is on the Mortgage News Daily. By the end of October, the daily rate for people with great credit, putting 20% down and also buying their first house was at 7.88%. That's the average rate nationwide for people with great credit. 7.88%, but by the time we hit the end of November, it fell to 7.13%. So in other words, rates fell by about 75 basis points when looking at daily rates, but despite that decrease in rates, we're not seeing an uptick in home buying demand just yet. So here's a report I want to share with you guys. I just want to kind of talk about rates because one would assume that if rates were to decrease greatly, which we have been seeing for about 2 months now, that would imply that home buying demand would increase, and therefore we should see an uptick in pending home sales. But again, we're not seeing that. This was just posted from the National Association of Realtors today, which is on December 28th. Can't believe it's almost 2024. And by the way, happy holidays and happy new year, everyone. Thank you so much for joining me in today's video. I appreciate you. So it says here, pending home sales in November were identical to those in October. Back in October, we had all-time record lows, the lowest amount of contracts being signed between buyers and sellers of existing houses since 2001, at least 2001. The Northeast, the Midwest, and then the West posted monthly gains in transactions. Meanwhile, the South recorded a decrease. All 4 U.S. major regions decrease on a year-over-year basis. It says here their pending home sale index, which is their PHSI, that by the way is seasonally adjusted. And again, it's a forward-looking indicator of closed home sales in the next 1 to 2 months. So kind of think of it this way. You get your offer accepted today. If you're living in California, chances are the house will be yours in about 30 days. So this is very much a forward-looking indicator of our U.S. housing market because this is based on contracts being signed between buyers and sellers, and therefore a closed home sale in about 30 to about 60 days from now. So in any case, it stayed at 71.6 this November, but it decreased by 5.2% on a year-over-year basis. I want to share some data regarding all of this, but first I want to share this quote because it disturbed me. Let's just say that. So this is according to Lawrence Yun, who's NAR's chief economist, and he stated the following here. Although declining rates did not induce more home buyers to submit formal contracts in November, a pending home sale is a measure of when a seller accepts an offer from home buyer, not by just submitting an offer here. In any case here, it says this did not induce more home buyers to submit formal contracts in November. It has sparked a surge in interest as evidenced by a higher number of lockbox openings. So what would you guys consider a surge in home buying demand here? So here's the, I just can't believe this. Anyways, here's the actual report, which is actually from the National Association of Realtors regarding foot traffic. This is a report I shared in my video from a few days ago here. So the number of real estate showings across the United States increased a whopping, or surge, I should say, surge by 2% year over year this November. It says November's 2023 U.S. showings were up or surged by 2% year over year. However, though, the pace of showing activity, again, a measure of real estate agents showing houses to their home buyers, actually decreased compared to October. Yet for some reason, Lawrence Yun says we're seeing a surge in interest because of this increase in lockbox openings, surging by 2%. Anyways, let's have a look at their report here because I have a lot to share here. Let's first talk about this right here. So this is a report from NAR again based on contracts being signed between buyers and sellers. It is seasonally adjusted, and also it is annualized as well. And that makes it easy to compare month-to-month changes because the numbers here account for normal seasonal trends in our housing market. So for example, in November and December, of course, we see a decrease of contracts being signed between buyers and sellers. That is normal. So the numbers get adjusted upwards because we tend to see a decrease during this time of year. In contrast, during the spring and summer months, when our housing market is in full swing, they do a downward adjustment because they want to compare apples to apples. Comparing a month in which activity overall decreases in the winter months, and again, activity increases big time in the spring months. So they do an adjustment each and every month to account for normal seasonal patterns here. So in any case here, in October, the index, which again, the higher the number is, means that there's more contracts being signed. So 71.6 was a number recorded in October that was revised, and it's the same this November at 71.6. However, it is down 5.2% year over year, and also it fell by 6.4% in the Northeast, down by 6.5% in the South. Also fell in the Midwest and the West as well. Regarding the seasonal adjustment versus not seasonally adjusted, here's a really good snapshot here. So again, a seasonal adjustment here, it's flat month to month. Whereas not seasonally adjusted, it decreased by 19.2%. So again, they do an upward revision from 57 to 71.6 due to the fact that activity tends to decrease in November here. I mention this because I don't want to have some confusion in today's video because I've been getting some comments lately regarding what does it mean to do a seasonal adjustment here. So I hope that makes sense for you guys here. Let's have a look at this here. Here's my own nerdy analysis regarding the trends we're seeing right now in pending home sales. So these two columns is what I pulled from the National Association of Realtors website. And this is their historical file, which goes back to 2001. If you guys want your own access to this file here, you have to pay about $1,000 in order to get access to this. But since I am a member of the National Association of Realtors, I can share this information for free and also provide my own analysis here. So this November, again, it's at 71.6, the same number as we saw back in October, but it is down by 5.2% from last year. So despite a decrease in rates, like I mentioned here in November, pending sales are still at all-time record lows tied with the previous month for data that goes back to 2001. Okay, let's talk about this year-over-year change down by 5.2%. This marks 30 consecutive months in which pending sales decrease on a year-over-year basis. The last time that pendings increased year-over-year was way back in May of 2001 or 2021, my apologies. Also, this 5.2% decrease is far worse than the average since 2010. As you guys can see below there, the average November year-over-year change going back to 2010, based on my own nerdy analysis here, is a decrease of 0.9%, whereas this year it fell by 5.2%. However, though, this decrease of 5.2% is actually the smallest decline we've had since February last year, when at that time we were down by 4.9%. That is that. But also I want to share this with you guys as well. Look at what happened back in November of 2022 compared to November of 2021. So last November, it decreased by 36%, whereas this year it fell by 5%. This implies that the market was falling much faster at this time last year compared to this year, even though we're down by 5.2% and also we're at more or less all-time record lows. Also, for comparison's sake, let's look at the month-to-month changes because again, that was flat compared to October this year. For comparison's sake though, This index fell by 3.2% from October through November last year. So last year's time, it decreased by 3.2%, whereas this year, it's flat. So again, the market was falling much faster at this time last year compared to this year. We also saw the same scenario that happened in September and October this year compared to last year as well. So let me briefly share that with you guys. So this November, flat compared to October, whereas last November, it decreased by 3.2%. Also, in October last year, it fell by 4.4% month to month, whereas this year, it decreased by 1.2%. Also in September, it decreased big time, down by 7.6%, whereas this September, it increased by 1%. So again, this implies that the market was falling much faster last year during this time. In addition to that, take a look at this, because from November 2021 through October of 2022, we had 12 consecutive monthly decreases in pending home sales versus only 6 monthly decreases over that same time frame this year. So again, the market was falling big time last year. We still have some troubles right now, but I just want to point out the fact that the data here supports the market was in big trouble last year. This year, we're at very low levels, but it's not taking like it did in the last half of 2022. One more thing I do want to mention regarding this month-to-month change. Again, flat this year. The historical averages in November, this is historical averages from October through November each and every year, going back to 2010, is a decrease of 0.2%, whereas this year it's flat. So the month-to-month change is relatively on par with historical averages, whereas the year-over-year change down by 5.2% is much worse than the decrease of 0.9% historically speaking. So basically right now we have kind of like a tale of two different housing markets. The resale market regarding existing houses, excluding brand new home construction, versus new home construction. Night and day difference here, because we have a low level of resale houses for sale and also houses that sold versus a glut of inventory of new home construction here. On top of that, pending home sales of existing houses are counted the same way as more or less sales of brand new home construction. So the US Census Bureau defines a sale for a new house as a contract being signed between a builder and a home buyer, or a deposit taken by the home builder. So a sale of new home construction really acts more like a pending home sale. So when comparing pending home sales in the resale market of existing houses compared to sales of brand new home construction, it is night and day difference here, which I explain right here. So in November, pending sales fell by 5.2% year over year for existing houses versus a 1.4% gain for new home construction. However, pending sales were flat month to month for existing houses, whereas new home construction sales tanked by 12%. So my big question here is this a sign that home builders are in trouble and are not able to drive more home sales by offering incentives to home buyers? In my personal opinion, we need more data, especially in December, given the fact that mortgage rates fell greatly in December as well. So here's a look at that. This is from the US Census Bureau regarding new home construction sales and inventory numbers. I made a video regarding this about a week ago. So I won't go over this report in today's video, but I just want to explain this right here, because sales of new single-family houses, again, contracts being signed between builders and home buyers, tanked by 12.2% in November compared to October. This, by the way, at 590,000 is seasonally adjusted, and it also is annualized as well. But it did increase by 1.4% year over year. So what I'm really curious to see is, because rates fell big time in December, will that drive more home sales in the resale market? and also in new home construction as well. But based on the data we have today regarding contracts being signed in the resale market, this implies that closed home sales will remain very low in December and January as well. So again, we have this tale of two entirely different markets here. The resale market sales are more or less at a 13-year low on a national level. And of course, we have historically low inventory levels as well. Compare that to new home construction. Besides November, sales have been more or less on par with pre-COVID levels, but they still have a high level of inventory levels. Per the National Association of Home Builders, of total inventory, this is including existing houses for sale plus brand new houses. Newly built houses made up 30% of all single-family houses available for sale in October, compared to the historical average at 12%. So normally the amount of new houses for sale only make up about 12% of all homes for sale nationwide. But as of October, it was at 30%. Because of course we have a glut of new houses actually for sale. Now, speaking of inventory levels, let's have a look at inventory for new houses. This November, it was at 451,000. This could be a dirt lot, or it could be a home under construction, or it could be a completed house. But just knowing my numbers here, this 451,000 houses for sale, new houses, only about 78,000 are completed. The vast majority of houses that are technically for sale are houses under construction or dirt lots in which the house hasn't even started construction yet. And that is this right here, 78,000 completed houses for sale this November, whereas houses under construction, 267,000, and also just over 100,000 houses that have not yet started, but they're technically for sale out of the 451,000 right now. So in any case, getting back to Fred here, 451,000 is not as high as the peak we saw back in October last year at 466,000, but at 451,000, this is much higher compared to pre-COVID levels when we had approximately 319 to about 340,000 houses for sale. In other words, a glut of new houses actually for sale here. Now, comparing these numbers here in the resale market, night and day difference here. So this is according to Realtor.com for the month of November, approximately 755,000 houses for sale. This is much lower compared to pre-pandemic levels. So for example, back in November of 2019, just over 1.1 million. Now there's only 755,000. In addition, back in November 2018, just under 1.3 million existing houses for sale. Now again, it's about half that right now. One more bullet point I want to mention regarding this tale of two entirely different housing markets here is this right here. New home sales had been rising due to builders lowering prices and offering to buy down rates for home buyers. So for example, maybe the today's rate is at 7%, but maybe the builder is offering a 5% rate for a 30-year fix in order to entice a home buyer to buy a new house. That's what I mean by rate buy downs. Also, home builders have been benefiting from a very low supply of existing houses for sale, as I share with you guys here. One thing I do want to mention though is that perhaps home buyers are more deterred by higher property taxes due to new houses, which usually have a higher property tax rate. And on top of that, high home prices as well. So in regards to that, here's a look at the median sold price for brand new houses nationwide. So this November, it was at $435,000. That is down from the peak set back in October last year at nearly $497,000. But at $435,000 right now, this is much higher compared to pre-COVID levels when the median sold price was in the range of $315,000 to about $330,000. Also, have a look at November 2019. The median sold price was at $328,000. Now it's about $107,000 more right now, this November. That's an increase of about 33% over the past 4 years. All right, to summarize today's video here, the number of pending sales of existing houses is still at all-time record lows, tied with the previous month in October, and also worse than the Great Recession as well. Therefore, because contracts signed leads to closed home sales in the next 1 to 2 months, we will likely see a very low amount of closed home sales in December and January next year. One thing to keep in mind, though, is that the pace of closed home sales this November is already very close to a 13-year low. The impacts to our housing market here is that a low amount of sales normally props up housing inventory. That's exactly what we saw in 2022 and this year, because inventory levels did steadily increase, but they peaked much later in the season than they normally do. If you guys want to see a housing market crash, though, we would need to see new listings absolutely skyrocket, flooding the housing market, causing a buyer's market, which of course would decrease prices greatly. Now, speaking of inventory levels, the month supply, according to Redfin today, is at 3.6 months on a national level. If you guys want to see home prices absolutely tank and for a housing crash to occur, we need the month supply to be at or above 6 months. So we have a long ways to go if you guys want to see home prices decrease greatly. But what's your biggest takeaway from today's video? I appreciate you guys watching today's video. Like and subscribe, and we'll see you on the next video.